face, warriors, my trading warrior brothers and sisters. Good Monday to you. Hello, Kevin, Patrick, Zoe, Zig. Say hello to Zia. See if I recognize him. Tom Lano, how you doing? Hi, Simon. Richard. Praveen, how are you? Miguel. Maud. Volume is low. My volume is low. I thought you meant the volume in the market. How's that? I moved the mic closer. Because I'm looking at your names. Okay. All right, well, let's have a great week. Who's up for a great week? The nightcap will be the NFP on Friday. So try and take care of most of your trading business before the release on Friday. Okay, so I want to start with Aussie. And last week, the bet was when we were grinding it out down here, I talked about it being a higher low, that you could get long in here, risking the low, but not have your stop 1 pip below the low in case there was a stop hunt. That never happened because after the session, we got the news of the Flynn indictment. And although the indexes recovered, really haven't negated the big candle that we've had in Aussie. So I still like it. Okay. In fact, you know, starting to get a little bit of a look of a ascending triangle. See where that 7650 straight line, and then you have this ascending line starting to look like an ascending triangle. I think it's viable to see 77.5. And actually, I went and I took a look at Greg's work. Here's Nick's on the Euro Aussie, looking for higher with a Gartley pattern here. But I did want to show the Euro Aussie. Who was it on Friday that brought it up to me, the Euro Aussie for a short? And I was very nonchalant, saying, well, it's a Friday, and almost anything I want to do on a Friday, I could get it done Monday, Tuesday. Who was it? It was Hasselhoff? Are you sure? Are you sure, man? You don't have sunstroke? Okay. All right, so anyway, it was a great call. Yeah, Tom, yeah, we're getting that astral thing. So I said, well, I thought it was going to close higher on the week. It didn't. It faded after that news event. We're lower again here. I would take a shot at maybe a fib retracement. We're holding this little double bottom. We could get a rally back to 675, even 57. Risking the highs, it might be worth it. Although Nick's looking for these highs to be taken out and head up towards 161st. So we'll see if that manifests. But I saw a look on Twitter. Although it's a weekly look, it shows up better on the monthly. And basically, let me get rid of this. The analyst was saying that this potentially is a head and shoulders, okay? Left shoulder, head, and now we're pretty symmetrical with the left shoulder over here on the right. So it might be worth a shot. Okay, it might be worth a shot in here. This is it, because if it turns out to be a head and shoulders, it measures pretty deep, basically back to the lows. Psychologically, I have just a little trouble with it because I don't think the euro has peaked yet. And although I'm constructive Aussie short term, I'm thinking it's just going to be a bear market rally towards 7.5. So anyway, You shorted it? Okay, Midris. Nice trade. So I wanted to show that. Everyone see how the guy, the technician, was saying this could be, this is your monthly chart. The weekly, it looks bigger, potential head and shoulders here. Yeah, and EuroCAD also got creamed. Okay, so EuroCAD also got creamed late last week, following through again today. So, you know, a lot of that was Canada. Canada was a great short. I think I showed Rudy's look before the news was released on Friday. So that covers that stuff here. And just a quick look at the majors. I knew what to do here. See, this is my problem with Euro Aussie is, you know, I still think there's a shot, especially if we hold these highs, for there to be another push up. Still think 120 is possible. I'd start getting concerned short term if we took this out. The low from, I believe Blake and I liked it's the day we thought the dollar was going to weaken. So the dollar did not make a new low on this push up, just like the euro did not make a new high. But I'm going to stick with this. I don't think this is complete. I'd like to see one more high in the euro. Now the pound's a different story. You know, Blake showed the breakout, the weekly breakout. I don't see anything to do. I can't get long up here. I know some people do want to be long up here, but I'm starting to think that I need to wait and see if we could start making some new highs without confirmation, which looks like it could happen here. So this was a confirmed high. So I think that we're going to get another confirmed high here. Japanese yen, I'm neutral. I can't get long here. It hasn't given me a reason to short it. Here's the Dixie. So this was our bearish call in the dollar last week when we liked the euro and I like the Aussie. Looks like we have a 1, 2, 3. Dollar still looks vulnerable to me. So that should really be setting up some type of short here in the yen. And after this big spike when the Dow is down 300, new highs aren't confirming. Okay, so this might be the area. I'm sure we got a lot of people shaking out of the yen, probably on both sides on Friday, but definitely with this rally here. And I think we're probably near some fib level. So even if it's not real bad, I wouldn't be long up here, and I'm seeing a lot of divergence. We talked about crosses last week, and then I'm going to hand it off to Steve. And it was, when Blake was talking about it, was my contention that we needed to make one more new high. Steve had a fib above the 135 handle, but still hasn't happened, but not that far away. We will not confirm up here. And the high that needs to take out is 4.5, which it didn't do here. I was calling this high is 405, kind of a hope high. So looking for shorts, but later on, maybe later into the week, maybe the NFP will be the inflection point. But it's my view that there could be a good short. Maybe it's going to be euro strength that takes it up here, or the yen continues, but on my radar screen for sure. Much weaker than the guppy, right? Guppy looks stronger, and that's because EG just keeps sinking. You know, didn't really give us much of a rally. I think Blake said he saw a Gartley down there. I'm sure he'll bring it up because he has some long-term ideas that could take it a lot lower. I'd like to see it hold and give us another rally here. So we're right on the verge on the cliff. Looks like Wile E. Coyote is standing on the cliff right here. You'll stay away from the pound? Okay. Yeah, no one's ever compelled to do anything. And with that being said, if you're not a subscriber, There's a lot of updates that you need to pay attention to. I'd invest $1 today because look at all these new updates. And look at all the Elliott stuff, all the harmonic stuff. I'm talking about all of this, Blake stuff. So, you know, the beginning of a new month, I really consider today the beginning, not Friday. You know, there's harmonics and Elliott, Euro Yen. Let's take a look and see if Greg's analysis lines up with what we're talking about in Euro Yen. Looks like he's looking for even a little bit higher. Wow, this is just 1, 2, 3, but yeah, he's not bearish. He's thinking we're topping here, we get a pullback and his highs. If this is only wave 2, who knows? So this is an example of, you know, now I have pause, but you know, you still have to trade what you see. You know, none of us are always right. But I have to admit, feel comfortable trading the other side of the market with the whole team. So, you know, not just Greta, but, you know, I don't like being on the opposite side of what Blake is seeing, and Steve, for sure, Mr. Confirmation. I know if I'm looking at it differently, and he, you know, he doesn't give opinions lightly. You know, he's got to see all the evidence before he does it. So I feel uncomfortable with that. Celios's macro, I feel I have wiggle room between what he's looking for long term if I see anything counter trend, but long term it gives me my bias. And Nick's harmonic work, I certainly don't like to fade Nick. I thought I'd get a better entry on Euro Pound, and she hit it right on the button. You would like to join our team? Oh, okay. Well, you are on our team, Idris. It does, Tom. Doesn't that help you? Because you know, avoiding a bad trade doesn't show up in our P&L, but man, is that important. Right? I mean, so people forget, wow, you know, that's a victory. I would have lost 80 pips taking that trade, and I still have that ammo to fire with. So, real important. That's why I'm a big believer in intelligence gathering, and, you know, not just anywhere. You know, you have to follow people for a while, you know, not just one good call, or maybe they're cold for a week and you write them off, because, you know, everyone has drawdowns. Okay, so it's over the course of time. That's how trust is built anyway. It's a process that takes time. Yeah. Okay. Well, Midris, there's got to be at least one level, because if you're trading, you're risking, you know, 50 or 100 bucks a month. So maybe you'd have a bigger account if you signed up. That's what I have to say here. But you seem to have a good feel for the markets. So if you want to post your ideas, Steve shows other people's. Okay, well then subscribe. And let's see here. So a lot of updates here. Test drive it so you have the traffic light page. And there's almost every instrument in the cosmos for you to trade. The team responded about 4 months ago and added many other instruments, you know, including Bitcoin, crypto. And that reminds me, we're going to have a discussion on Bitcoin with my guest today. Carl Denninger. His Twitter handle's @TickerGuy. And I thought he was much more of a market guy, but, you know, his writings have been published in Foreign Policy magazine. And I asked him, hi, Raphael. How are you, my friend? I had somebody wanted to talk about, and at first he wanted to talk a little bit about what was happening with HealthNet and CVS, but then he brought up Bitcoin. So we'll talk about Bitcoin and other international things and domestic that may have impact in the market. I know we're not supposed to be political in here, but you cannot ignore the politics. And for 10 minutes or 5 minutes, whatever it was Friday, you can't ignore it. It's having impact on the market. Of course, everyone bought the dip, but maybe that's just a harbinger of if things really turn even more serious next year, that it could be the catalyst along with the Fed tightening. So we have to pay attention to everything as traders. It may not be comfortable to talk about politics, talk about, some of the things that could go wrong, and, how we may not have, such a cushy life because of what might happen. But, give me a Y if you'd rather be aware, and give me an N if you'd rather be an ostrich and have your head in the sand. Sometimes I wish I didn't know or see what I see. Ignorance is bliss. Okay, so anyway, it's too late. I've been doing this a long time. I see a lot of things that aren't real kosher happening out there. So we're gonna go wherever we can go to be prepared for what's coming down the line in 2018. Is that a deal? This is a big year for every one of us, because it's, all you have is today. So I think I'm going to hand it over to Nostra Volgi. Maybe I'll get more clarity on a few. I know I will. I'll get more clarity on a few more instruments going into my thoughts on gold. Looks negative. Yeah, I don't think that we get any kind of even trading low like you could see when the market sold off, Martin. Yeah. Gold pop, but it's not following through. It probably happens on an S&P top. And, it reminds me, I had Peter Goodburn on, and I tweeted it. I also talked about it. He was talking 2,700. I know some people are talking 2,680. So I'm looking at those levels, and let's see where gold's at there. But I don't think I have to be in a hurry to buy gold. So Aussie's holding up a little better. Gold's almost giving it all back. Yeah, 1250. Okay. Maybe 1220. We'll see. Okay, so Steve, you around, buddy? How you feeling?
Hey, good morning, Dale.
Hey, I was rambling a little bit here. Thank you for saving me from myself.
How have you been? How was the weekend?
Good, buddy. Looking forward to these holiday December markets. They can be treacherous, man, these holiday markets. So you really got to be disciplined here. I mean, Friday was an example, wasn't it?
I think we already have some first signs of some volatility, and people expect a Santa Claus rally, and we might get that. But yeah. I do believe that December is going to end up being an interesting month because we have things happening, on a political level, and the markets, I think, more or less are going to respond to it. So I think that it might end up being a bumpy ride.
Yeah, I mean, they may not be able to get the debt ceiling extended. I think they will, but they
will. I don't think that's going to be an issue, to be honest.
They always just do, kick it down the road for another 90 days or something.
And to be honest, I fail to understand why they call it a debt ceiling, because it has. Yeah, I mean, Ceiling, I mean,
the highest ceiling, I think it goes all the way to heaven.
yeah, exactly. I think it used to be an okay metaphor, but I don't think it's an okay metaphor anymore, because what kind of a ceiling is something that you just keep moving every year, every couple of years or whatever, higher and higher and higher. It makes no sense. It ridicules the whole concept of having a ceiling.
It's an oxymoron. So
it is.
It should be debt mountain instead of ceiling, right?
And something, they should just not have it, because let's be honest, I don't remember when the last time they had a surplus was. I think it was Clinton. I think had a surplus for a couple of years, 1-2 years. I think that was the last time. So we're talking about a couple of decades ago, almost back. You know what I mean?
Yeah, the 90s.
Yeah, exactly.
Yeah. So, what do you think? I know you probably have some stuff on. Still short silver and.
Yeah, and gold. Yeah, definitely. And I'm going to add gold if it actually breaks through the triangle. I'm going to add to gold. I already booked.
That Aussie change anything for you, at least short term?
No. Let me show you. Listen, as I said when I was asked, like I think it was on Wednesday. I'm pretty sure it was on Wednesday, because Thursday I wasn't here. I had that meeting with the head of development, and it wasn't on Friday, so it must have been Wednesday. So listen, I do see the potential of a rebound here for Aussie, but as long as this 76.40 area is holding, I have absolutely no reason to want to be long.
Yeah, so I probably at least 2 buy stops above Friday's high.
Yeah, so because there's always the possibility that this is just one more triangle. So we already saw this happen.
Yeah, I think Greg is looking for this to be a C wave up towards there, 70.
And it might be. I'm also seeing the potential of a larger rebound, for example, towards
the 7.5.
Yeah, but I really want to see a daily close above this 76.40 area. And this is anyhow just one element, because the reason I'm looking for gold to perhaps follow and break down is, besides the fact that this looks like a triangle, so higher possibility of resolving lower, it's also the fact that silver has already done that.
That's right.
Okay, and perhaps in this case silver is leading. So I shorted silver on that break. I added a little bit lower. Now I've taken profits on half of my position when we tested the 61.8. I will gladly add back to that as well if we rebound to the 1670, 1675 area. I'll gladly add, as I will add to my gold position. If and when we finally break below the 200 daily moving average, it's just a little bit lower from triangle support. So yeah, I'm still holding to half of the initial position I put on for silver and the position I put on gold, and I'll happily add
that
to.
Numbers my Aussie constructiveness. That's why Aussie, even if it does rally to 7.5, might be a great short for another new low.
Oh yeah,
especially if gold's going to 1220 and that blue line you have comes in right around there, the gold.
Yeah, and if you look at Kiwi, since it's also a correlated market, if you look at the Kiwi, also potential for a rebound, but what have we seen yet? Nothing more than what you could interpret as a short-term horizontal consolidation, right? Because this looks like a symmetrical triangle as well. So I mean, yeah, can it move higher and just produce some stronger rebound before going lower? Sure, it can, but as long as it doesn't clear this resistance area, you should always be looking at the direction of the trend. So unless I see that area break to the upside here as well, I have no reason to not believe that there aren't higher chances of a break lower towards the next support area, which is probably this 66 and some change, the 127.2 of the last move higher. So, you know, that's what I'm looking at. And, you know, even if the Aussie starts breaking higher, you know, that's not 100% guaranteed that gold will follow, because on occasion we see correlations, you know, weaken or break down or whatever. So, you know, I do monitor markets that, you know, affect one another. But on the other hand, I also, you know, treat every instrument as an individual instrument, and every trade as an individual trade. So, you know, I'm comfortable now because I'm in the money for both positions, and that gives me the ability to, you know, to handle them from a safe distance, because, you know, I already have profits. I already booked some, and worst case scenario, I'm just going to give back some of the profits to the market. So that's always a good position to have, not worry about losses.
Yeah,
in a specific
all
trade.
the heat's off.
All the heat is off, exactly, and quite fast actually, because once silver broke down, it accelerated, so it brought me in profits immediately, and gold followed to the bottom of that support area. So, you know, it's one of the very good occasions that not only something works for you, but it works fast for you.
Right.
Of course, not every trade can be like that, but, you know, whenever they happen like that, it's always a welcome. You know.
Can you answer Rio's question, since you have
Sure.
the screen? You know,
if you were Aussie USD bullish and Euro USD bullish, then what do you think about the Euro Aussie at the same time? Obviously, if you're bullish both of them, you don't want to do anything about the Euro Aussie, because as we've said many times, you always look to be short or long a pair that, you know, one of them you believe is strong and the other one you believe is weak. So you want to be long the strong pair against the weak pair, or short the weak pair against the, you know, the strong one. So that's why you would rather avoid taking trades in currency pairs that both of them are weak or both of them are strong, because obviously it's more of a coin toss then, right? On the other hand, though, as I said, for example, currently, if you ask me, I have more reasons to be bullish the Euro instead of being bullish the Aussie. But, you know, that's as far as we have seen already. That doesn't mean, on the other hand, since you're asking, that you cannot be monitoring some technical developments that perhaps tell you that, you know, that might be about to change for a short period of time. For example, the Euro Aussie, I was monitoring this ascending wedge, and it seems to be breaking lower, and I'm now monitoring as a confirmation, you know, this little horizontal area here. So if we break below there, I do see the potential of a deeper correction lower. So if that's the case, then it means that for a short period of time, the Aussie might overperform the Euro. But that does not change the fact, even if you zoom out, that for a long period of time, with small corrections, of course, the Euro has been stronger, and I have no reason to believe that that's about to change in the medium term. Because, as I said, you know, a correction lower for a few hundred pips does not mean that the trend is changing, right? Because this is a series of higher lows, and even if we move lower from 156 that we're currently at, roughly, even down to 152, we are still not breaking the medium-term uptrend.
Nice mentoring, Steve.
Oh, thank you. By the way, Euro Kiwi, since we talked about the Euro and the Aussie, let's have a look at the Euro Kiwi as well. On Friday, we got another rejection from the ascending channel's resistance. Obviously, the multiple rejections from this resistance line show that it's, you know, an area of importance, and the market, you know, does care about it. But on the other hand, unless we break down from this horizontal zone, we don't have confirmation that perhaps a deeper correction is going to begin. So, you know, if you want to be more sure that, you know, some short-term counter trend move is going to start, I think we'd rather wait for 171.40, let's call it, and see what happens from there. If we break below there, then there is a good chance, you know, that this recent range that we had is going to extend to the downside for a couple of hundred pips more before perhaps resuming the recent appreciation. Let's see. I'm not going to cover a lot of markets on my own because I see we already have a lot of questions. So I'll start covering what we see here. Okay, questions about Euro Kiwi, we saw that. Questions about Euros, we saw that. EuroCAD. Let's have a look at the EuroCAD. Okay, the EuroCAD, you know, we were looking at it back then, as you see. We said that as long as it holds this horizontal line, it can you know, move to new highs. It actually did that, so we can now delete this. But as you see, after Friday's GDP print, the pair collapsed actually, and we're back down testing this 149, call it 70 area. Now, I can understand, you know, someone could want to be like long from here with, you know, quite a tight risk reward, but, you know, the fashion in which it collapsed on Friday from, you know, after breaking to new highs just for a day, it's a little bit troubling. So personally, I wouldn't be doing anything with it at the moment. Okay, and even if you see the chart, you know, it's not the best trending market you want to see. It's, you know, it has produced some nice moves in the recent past, but I don't know. Personally, I don't have a high conviction here. You know, I expect the CAD in the medium term to continue being rather strong. The same applies with the euro. So it's one of the cases we said before. Why should I be looking for a trade with the euro and the CAD and not with, you know, since I believe that both of them might be doing rather well, and, you know, not be looking to be long either of them against something weaker. I will stay away from the pound Aussie and pound Kiwi. Yeah, let's have a look at the pound crosses, because actually this is really interesting. What is interesting, first of all, is that the cable started, you know, the day it actually gapped lower and came down to exactly retest this broken trend line. You see, it's a very long-term important trend line for the market. So it came back, it tested it to the pip, and it has been rebounding since. That's obviously a bullish signal, right? And if we have a look at the crosses, the pound Kiwi did the exact same thing. So it got lower, it tested this broken ascending trend line, and it seems to be rebounding from there. So why not a push to new highs? As I had written in my analysis as well, I'm targeting the 161.8, which is almost at 120. Sorry, at 2. It's 199.61. So why not? I mean, this is a sequence of higher lows and higher highs. So sure, the uptrend looks absolutely intact. And let's have a look at the pound Aussie as well. Same deal with the pound Aussie. Perfect. I mean, we had a very bearish candle on Friday. That's indeed the truth. It was an outside black candle, but so far today, we retested once again that high, so that breakout from that high, and we're moving higher from that point on. So, you know, we haven't even managed to break the first support zone that we found. So unless that happens, we have absolutely nothing to talk about in terms of, you know, reversing and moving lower. And as I had said on Friday that we were looking at the potential of some reversals, I had said that anyhow, even by looking at the Euro Aussie, and that's quite important. Dale mentioned the euro pound. Dale mentioned the euro pound before, and I have to tell you that the euro pound seems to be about to break lower, and this is quite a well expected development, and I'll explain why. But before I go into that, even by looking at the euro pound and seeing that the pound is stronger and perhaps it's going to accelerate against the euro, so the euro pound is going to move lower. If you're looking for counter trend trades in the crosses, you would rather choose the euro crosses instead of the pound crosses. So if you're looking to take some short-term counter trend trades, you'd rather go for euro Aussie and euro Kiwi instead of pound Aussie and pound Kiwi. That's my opinion. Now, why do I think that the move lower from here is should be an expected more or less development? First of all, because we had an impulsive move lower from that high, from the 93 high, the 0.93 high. It was a 5-wave move down. I mean, it's clearly visible here. Second of all, this was a triangle. Even if you look at it on a weekly chart, sometimes the weekly chart gives a much cleaner picture. Just look at it. You see? A, B being a triangle, C, at least C, because that might end up being a 1, 2, etc. But, I think at least one more leg lower is in the cards here. In this case, a perfect measurement comes, an ABC equality target, should bring us down to 84.70. So that's what I'm looking for, and I think that the euro produces a really good opportunity if we see it clearing. It's already testing this triangle support. If we see it clear this horizontal area, I think there will be nothing much stopping it for at least one more leg lower. So now we covered pound Aussie, pound key. Yeah, we just did that. Let me see more questions. What did you say, Dale?
Pound Aussie.
Yeah, we saw that, pound Aussie and pound key.
All right.
Hey, Steve.
Yes, mate.
Hey, good morning.
Good morning, Blake.
Hey, so you were talking about the pound, and the pound is bid up this morning as it looks like the UK and Ireland's gonna.
Ireland, yeah.
Yeah, they're going to try to firm up some agreement, which will allow the EU and the UK to move forward in terms of an agreement, because they wanted to make sure they rectified the border issue, which that produced a really big pop in the pound today, off the lows, and the pound looks pretty bullish. But you were talking about the pound Aussie. This evening we've got a ton of Australian news, and I'll tell you, the Aussie looks poised to move higher, and we have retail sales out of Australia. We have the RBA decision tonight, current account out of Australia. I personally have a long pound Aussie, but I don't know if I'm going to be long going into this evening. I think the Aussie looks poised to move. The risk is.
I'm in agreement with you, Blake. I don't know if you were on the show. I said it quite early. I'm in agreement with you. I see the potential for a bounce here in the Aussie. Yeah. But for me, unless we clear the 0.7640 area, there's nothing to do. I mean, I really want to see that area break higher.
Right, but if we break that, it's it's game on. It's game on, yes. and you have to. I think you have to be really careful with. I'll probably be out of my pound Aussie long later today, ahead of the data out of Australia tonight, because.
Definitely, but I guess you also agree that having to do with the crosses, probably if you want to be short Euro Aussie, Euro Kiwi, probably a better bet than pound Aussie and pound Kiwi at the moment.
Say that again.
I said that probably you have to agree by seeing what the euro pound is about to do as well, that being short, if you want to be short Euro Aussie or Euro Kiwi is probably a better bet than pound Aussie and pound Kiwi.
Yes, I would agree with that because the pound looks bullish. I mean, the pound looks like it's going to make a move to you know, the high 130s over the course of the next, you know, it could start today. I mean, but it looks like over the course of the next week or two, we're going to make our way back up towards 140. I think a squeeze is increasingly likely in the pound, which is good because I'm long the pound right now, and I think it's going to continue higher. But yeah, I think if you're going to be long the Aussie, I mean, hell, probably the best place to be long the Aussie is just long the Aussie US dollar, you know?
Oh yeah, absolutely.
Yeah, because the euro still looks constructive. I mean, if you look at the longer term charts in the euro dollar, we still have a bull flag pattern, which, you know, the euro breaks above 120 and it's game on. I mean, the euro is probably going a whole hell of a lot higher. That's what I would think.
Yeah, even in the very short term, if you see, this also looks like a short-term bullish consolidation. I mean, nothing bearish with it.
Yeah, no, it doesn't. It actually looks, you know, like I said, it looks like a bull flag pattern, and longer term too. I mean, if you look at even from, you know, you start taking from the 104, 105 area. Yeah. No, it's a very bullish looking chart, and I sure as hell wouldn't want to be short the euro right now. And you know, like I said, the Aussie, you know, you break that 96.40, 96. You say 96.40, I say 96.50. But those are the important levels that we break through that. And you know, the dollar looks very vulnerable. I mean, you were looking at the U.S. dollar Canadian. I don't know if you looked at the U.S. dollar Canadian.
Not yet, but I passed you the screen so you can check it out.
Yeah, I mean, here's the dollar CAD. I mean, this dollar CAD is at risk of having a serious meltdown. I mean, we got a big double top, you know, following the jobs report here, the Canadian jobs report. I mean, we look like we're ready to attack like the low 120s. So, I mean, if you look at the dollar just all the way around, you know, here's again, I was talking about the Aussie. You were talking about it at 76.40. I just say 76.50, which whatever. You know, we look pretty bullish here, like we want to continue higher in the Aussie US dollar, which is, you know, obviously, you know, trying to weigh into to dollar weakness. So there's the pound. The pound looks bullish. The euro, you know, again, big bull flag pattern. I mean, if this thing starts playing out, this could be gnarly big. I mean, look at, you know, you're talking 130. You know, if we really get going. And you know, I think about Donald Trump just posted that it's going to be a big day in the stock market today, but let's say it's all factored in. You know, let's say the tax plan is already factored into the dollar, and you start looking at the dollar and you start thinking, well, if that's all we've got, you know, on the dollar index, and I know I discussed this during the week ahead video, but if that's all the bounce that was created right here, you know, is it possible, you know, looking at this dollar index, is it possible? And I'm grabbing a pen here. I know people a lot, you know, if you're long the dollar, you don't want to think about this, but grabbing a pen, you know, is it possible that we have this flag pattern that, you know, we're heading down here in the dollar index? It's scary looking, isn't it? I mean, and there's a lot of people long the dollar right now, and I'm actually looking at the dollar yen. I'm really hoping the dollar yen makes a move to 113, 113.15, 113.20 today. I think it's set up for a really good reversal trade. Nice bearish move here. I'm looking for. I'm just waiting for another, you know, 20 some odd pips or so, and then I'm looking to short the dollar yen again. I actually took a loss in it last week, but I don't mind. I don't mind getting back, you know, back in and revisiting this trade. And I'll probably be more aggressive. Last week I wasn't very aggressive because I knew we were in the bounce process, and so as I shorted, around here, I was thinking, okay, well, it could, break higher, and it did, and it's going right to the 618, and that's usually the place that I'd like to establish a foothold when looking for a trade, is right around the key, golden fib level. So, but this is a really important week this week for the dollar. We have non-farm payroll, and this is, if you think about today, okay, today's Monday, and the dollar is a little weaker. Against like the pound, and the euro dollar is actually weaker, but let's say you pick up the dollar short on this bounce today, and over the course of the next couple of days it starts to drift lower again, and then we get to non-farm payroll, and then you move your stops up to break even on all your dollar trades. If the non-farm payroll comes in and it's the average hourly earnings maybe come in a little less than expected, or maybe the headline number is a little weaker, then you got yourself a really good trade. So today and tomorrow, I think is a really great setup for a potential trade at the end of the week if we get some dollar weakness at the end of the week. What I'm trying to say is I'd like to position myself short the dollar early this week, in anticipation of what could happen going into the end of this next week. And that's kind of the way I'm looking at the market today, and that's kind of what I'm doing. One of the things I did do yesterday, and Steve, you had a chance to listen to the week ahead video, right?
Absolutely, I always do.
Okay, so for those of you that didn't listen to the week ahead video, here's the link. You guys should whoops, let's see here, December 3rd. Yeah, here it is. Here, I'm gonna go ahead and put it in the, I put it in the chat box so you guys could listen to it. One of the things that I was saying on the week ahead video is if the dollar started off the week on a weak note or on a strong note because of the tax plan being passed, early Saturday morning, or some of the news might have been a little misreported on Friday regarding the Flynn testimony, then I was looking to take advantage of that. And when the pound gapped down over the weekend, when we gapped down right here to 134.30 on Sunday, is right here actually. It's this green bar, or this white bar here, or green, however you want to look at it. When we gapped down here, I picked up the pound dollar. I picked up more of the pound dollar on the open, and I was out and about yesterday afternoon, so I wasn't around. I had to leave in the evening to go run some errands. And so I picked up the pound. Now I didn't see this happen all night because I was sleeping, but obviously the pound is higher, and we had some strong UK data as well. So this allowed for a bounce in the cable, and I hopefully some of you guys took advantage of that too. I think that was a good opportunity. That was a prime opportunity. One of the things I love about the pound right at this point in time is we are above this multi-year trend line, and so if we break into new highs from here, above 135.50, it's going to be really, really bullish for the cable. Now, one of the other things that has been on my mind as of recently, and I want to talk a little bit about this U.S. dollar Mexican peso. I tweeted about it on Friday, but I really want to discuss it a little bit in depth. I don't know what's going to happen with the President of the United States, but there's I think there's a bigger risk at this point in time that the president of the United States is getting closer and closer to being in the spotlight of this, Russian investigation. And Robert Mueller, who's the lead investigator, he's putting the pieces of whatever puzzle we have together, and what it leads to ultimately, I'm not sure, but you can see members of Trump's inner circle are starting to be targeted more and more and more, and it seems like Robert Mueller's inching his way into to the root of the issue, and to find out if it was really obstruction of justice by the president of the United States. I try to think about what are the trading ramifications of a serious if the president of the United States comes under some serious scrutiny, is he gonna not be able to, or is his administration not going to be able to focus on certain things, is the way I'm looking at it. And one of the major topics of the Trump administration over the last couple of years, and even before he became president, was building a wall on the US-Mexican border. What if that never happens, or maybe even something else more dramatic? What if President Trump is eventually impeached? I look at the U.S. dollar Mexican peso, and like I said, these are all just things that I think about. Not necessarily I'm going to trade them because I believe it's going to happen. It's something that I just kind of think about as I'm navigating through the markets, and then I start looking at technical formations, like in the U.S. dollar Mexican peso is a great example of something that, in my opinion, has been set up pretty well. Let me explain to you what I mean by that. So we have this this high that was hit. This is before Donald Trump took office. I take that back. It was his inauguration. As soon as he was inaugurated, I actually shorted the U.S. dollar Mexican peso. This was actually I had to think back. It was actually one of the best trades that I did this year. Actually, we blogged about it here at ForexAnalytix. Right when the U.S. dollar Mexican peso was trading around this 21.50-60 level, I shorted the heck out of the U.S. dollar Mexican peso, and I made pretty much this entire move. Me personally, I had to think back about my first quarter. This move right here pretty much made my first quarter. Now, obviously, there was more downside after that, and I traded it back and forth, all the way back down. When it came through this channel, shorted this up here. I started trading it to the long side. Kind of got whipped around this last month. I got whipped around this last month right around here. I did trade a little bit of this. I got whipped around a little early this month, and then I did make some money right through here on the short side like 2 weeks ago. So overall, I've traded the U.S. dollar Mexican peso pretty well, but the thing about the peso, if you didn't see what a key rejection this was, if you take the high here, from the inauguration night, if you will, to right here, and you'll notice we stopped at the 38% retracement. Now, yeah, we were slightly above it, but when you're talking about weekly and daily trends, you can break slightly above it and still be really within the vicinity. One of the key developments here over the last couple of weeks was this false breakout. Let me remove these fib levels again. Okay, this false breakout above the high, you can see that it's circled, and that led to the failure. And I did short the U.S. dollar Mexican peso over the last couple of weeks. Made some pretty good money shorting it through here. because of that false breakout. Now, what we are setting up is a bear flag pattern. Okay, this is a bear flag pattern after a false breakout, which to me, whenever you have a false breakout, that leads to a breakdown, which that's what we got. But I don't know if this is the end. And like I said, if you start thinking about, how much hot water is President Trump or his administration in? Does the focus turn away from Mexico and start really focusing on getting yourself out of hot water, or, defending yourself, if you will? Will that lead to continued Mexican peso strength? And then you start thinking, okay, well, how about the stock market? Does the stock market show some signs of weakness, and if it does that weigh on emerging market currencies? Meaning that does the dollar Mexican peso actually go up as a result? Those are all questions that I can't really answer right now, but what I'm looking at technically is a bear flag pattern, and I will not really hesitate if the US dollar Mexican peso breaks through this 1850, like 1858, 1859 level. I'm going to start looking for US dollar Mexican peso shorts. And like I said, if things start to accelerate with this Trump investigation and his administration, that could indeed weigh on the US dollar Mexican peso moving forward, and it could strengthen the peso, which would be unconventional wisdom, because you would think that emerging market currencies would actually weaken in the result of some risk aversion. But this may be a different story. So this is a setup that I'm watching very carefully, and I'm thinking about quite a bit, and not short the US dollar Mexican peso yet, but I'm really strongly considering it. So hopefully you guys have a little bit better idea of what I'm attempting to do, or what I'm thinking about doing here with this particular currency pair. So anyway, Dale, I know you have an interview coming up, but let me see if there's any questions regarding what I just talked about here over the course of.
Great segue for Carl too, bringing up what's happening in domestic politics and the investigation.
Craig says, oh, thank you. Says, I don't understand. It was perfectly legitimate for President-elect Trump to develop relationships with Russia. Candidate Trump did not, as the actual real news came out to be within the testimony. Regardless, I'm thinking U.S. dollar short. I'm not a political analyst, and I don't know. Because I think about like everything that transpired, and I'm like, was it illegal? Wasn't it? It's not me. It's not for me to decide, and it's way above my pay grade to try to figure that out. What I'm looking for is what the market reaction is. As again, if the president has to defend himself, and or his administration has to, where the focus isn't going to be on Mexico anymore. It's going to be on self-defense and trying to work through the legal matters. And that's where me as a market participant, I start looking at the peso saying, okay, well, that might actually give me the green light to buy pesos. I'm indifferent. I'm not going to sit here and give you my political views on how I feel and what I think should happen and shouldn't happen, and what is legal, what's illegal, and what's right and not right. It doesn't really matter. I'm trying to think about what I'm going to do as a market participant in the event that things escalate a little bit. And so that's what I'm, that's the point of view I'm trying to take here. So anyway, Raphael said that was a great week ahead video, Blake. Thank you very much. I appreciate that. Nick says, hey Blake, commercials appear to have a near record short in the euro dollar. How do you think that affects the bullishness of the pair? Well, I mean, if commercials are net short the U.S. The euro dollar. You know, I didn't take a look at the CFTC data this weekend, which I should have, but I was actually a quite busy weekend. So you know what? Let me answer that question tomorrow, because I really want to take a better look at the COT data from Friday. I didn't get an opportunity to. It was a very busy weekend for me with personal issues. So with that being said, Dale, I'm going to hand it over to you. I know you've got your interview, and I don't want to take any time away from that.
Thank you, Blake. Great analysis, thoughtful as usual. And
thanks, Dale.
Carl, I'm going to make you a panelist because I don't believe you brought any charts or anything to share. So that should give you at least, I should be able to hear you. Waiting to hear you.
Can you hear me?
Got you, Carl. How are you,
All
buddy?
right. Oh, I'm doing fine. It's a beautiful morning. Well, at least a little bit anyway over here. I see you brought up
where are you
one of my pages.
Yeah, I'm showing your website.
Yeah, that's a few articles back, but yes.
Yeah, I was scrolling through it, and what I'm interested in, Carl, is you know, how did you come to be a writer? Was it always your you know, your desire or goal to be a political commentator, financial commentator? Why don't you tell us a little bit about your journey? I'll call this point B. Maybe you could give us the highlights of point A and how you got here.
Sure. Well, in the 1990s, I was the CEO of one of the original publicly available internet companies. Well, not publicly traded. We never did go through that nonsense. And in large part, that was because what I saw in the 1990s in the market was a bunch of scam corporations that never made any money and never were going to. So we decided to navigate that as a privately held firm instead. And I semi-retired in 1998, having sold the company to WinStar, which, if you remember, was one of the largest corporate bankruptcies in the history of the United States a couple of years later. So their check was good. That was the important part. And then in 2007, I started writing the market ticker because after the early spring crash in China, I don't know how many of your listeners and viewers remember this, but the first couple of months of 2007, there was a enormous detonation that occurred in the Chinese marketplace overnight with what at the time appeared to be no explanation. There was nothing particularly going on, and it just all went in the handbasket at once. And so I started looking around saying, okay, you know, as someone who at that point was a more or less a passive investor, I was trading my own account, but I didn't see it coming. And so when I dug around, what I found was a tremendous amount of excessive leverage in the banking system, and a lot of it was centered in the housing market and what I considered to be fraud. So I started writing on it. I said, you know, look, I got out the last time with my hide intact. I'm going to get out this time too. But how many people got ruined because they had no warning the last time around? And the answer was a very large number of people that had their retirement income and everything else destroyed.
Yeah, that was the second time. 2000.
Yeah, that was 2000 was the one that I. Yeah.
Yeah, so that's why a lot of people after that said, you know what? If anyone's going to lose my money, it's going to be me. And we had a big wave in self-directed traders after that, when people found that even a diversified portfolio did not.
Yeah, it didn't help you very much, did it? So you know, so the basically what I started with was analyzing the bank and turned into the Federal Reserve System, because some of the first articles I wrote actually had to do with Washington Mutual, which was paying dividends with money they didn't actually have. That should have led to them being closed the day after they reported their first quarterly numbers for 2007. It didn't, of course. And a year and change later, they failed, exactly as you'd expect when you start trying to hand out money you don't got. Eventually, you will run out. Your checking account balance will end up negative, and that's, that was ultimately what ended up happening.
So was this project your way of spreading the word to help people not get caught up in things that could be damaging to their financial life?
Yeah, it was that, and it was also my way of giving something back, because I had certainly profited mightily from the internet craze, even though we didn't engage in any of the nuttiness. I was in the right place at the right time, and so there was a lot of money that was made there running a company in that environment. Of course, the question is did I really owe anybody anything? And the answer is probably not. But I felt that it was the right thing to do. You
enjoy it too, don't you?
Sometimes. I mean, it's kind of funny because over the last 10 years, there's now over 11,000 articles that have been published on the market ticker.
Wow.
Over the last 10 years.
Prolific. Yeah.
Yeah, and there's nobody else writing on this account either. I mean, everything that you see here is my work. It's not like some of these sites that pick up 2 articles from this guy and 1 article from this guy, and they quote this, and all of this is my work. There's, of course, I excerpt other people's things if I'm making a point or making a commentary on something they've said, but in terms of who's actually doing this site, who's actually running the site, it's all mine and has been since the beginning.
Okay.
The problem here today is that we're 10 plus years into this. It's 2017 now, almost 2018, and despite all of this, we really haven't changed anything. If anything, the problem's gotten worse.
Okay, so now we're going to fast forward to where we are now, and I found it interesting when you and I exchanged a few DMs on Twitter. That you have an opinion on Bitcoin and crypto. So why don't we start there? You call it bit scam. Tell us why it's a scam, Carl.
Well, all existing cryptocurrencies that are in the market today, someone may eventually come up with one that doesn't have this characteristic, but all of them today give you the same reward for an ever-increasing amount of work. Okay, so if you think about the classic Ponzi scheme, Charles Ponzi and his postal reply coupons, that was the same deal. You got the same reward, same number of dollars for a ever-increasing amount of work. Why an ever-increasing amount of work? Because there's only a certain number of people, and it gets harder and harder to get the people to generate this traffic. Okay, well,
are you talking about like bit mining?
Well, yeah, the problem with mining is that it requires, because of the design of the system, the problem that you're trying to solve, the mathematical problem, becomes more difficult on an exponential basis the more coins are mined. And yet the reward that you get for mining a coin is a coin. Okay, so the reward's exactly the same, and yet the amount of effort that is required as time goes on goes up. So what this means is whoever comes up with one of these things, whether it be Bitcoin or Ethereum or Litecoin or whatever the next one is, whoever originates this gets a tremendous reward in percentage terms compared to everybody who follows. And not only that, but the value of his reward goes up as additional people do work, but he did nothing in order to obtain that additional value. So this is the classic definition of a Ponzi scheme, and I believe that if you actually, if you had governments that were to look at it in this sort of a context, this context, just analyze it mathematically, every one of these things would be considered felonious, and everyone involved would go to jail. Now, we don't live in a world where that happens in the United States, or for that matter, pretty much anywhere else anymore. But it's kind of amusing if you go back and look at the old Dragnet episodes. Remember the old television series in the 1960s? Sure. There's actually one of the episodes is this guy who's running what he's charged with is running a Ponzi scheme, and he gets into court, and the mathematician gets up in front of the board and points out exactly this same pattern, that everybody that you recruit to do this thing has to do more work, and yet they get the same reward. And he says, well, eventually you're going to run out of people who can do this, right? And there's, there's the silence, and then, nah, 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 and the verdict. Okay, so the problem is that all of these schemes are designed the same basic way. They all have different features. Everyone tries to come up with something that differentiates one from another. But at the end of the day, they all have this basic fundamental feature. And Bitcoin, of course, has a maximum number of coins, which most of these have. There is a terminus on this exponential problem, which leads to a number of other issues, because as things stand today,
I mean, that's a whole, one of the major theses besides anonymity, which we're seeing disappearing, that, people that own them are going to be audited for years now. I read an article about that.
Well, anonymity, look, anybody that believes that Bitcoin is anonymous in any way, shape, or form is on drugs. I want to know what they're smoking, because that's not even, I mean, some things may be legal in Colorado, but what these guys are using are not legal anywhere. The reality is the only way a cryptocurrency works is that every single transaction from the mining of a particular token forward must be able to be reconciled and proved by anyone at any point into the future. And since cryptographic math is admissible in court, every transaction is admissible in court. So the idea that you can somehow have anonymity in a world where every transaction is permanently auditable and carried around in public in the blockchain on a forever basis is laughable. The only reason that you have people saying this is because it's one of the attractions that people have for doing some of the things that they do with these currencies. And there's no anonymity there at all. None.
Okay. So while the mania continues, what do you think is going to be a tipping point to change the narrative to what you're talking about now? Does it come in after the fact, after prices have deflated? China made an attempt to make it illegal, really didn't have any impact on the market. What's it going to take for this mania to end?
Well, I'm not entirely sure. I mean, it's always easy in hindsight. You look at the housing bubble and the collapse, and it's obvious that what you were doing was issuing loans to people that had no money. And
rates started to go up to kind of pull the sheet off.
And in the 2000s, here's the interesting thing about the tech crash is that I can make a pretty clean argument that it was this little nothing company called MicroStrategy that announced an accounting irregularity that actually set the crash off. Now, MicroStrategy, by the way, is a firm that's still around. You can still look them up, MSTR, it's still a trading symbol. But there is a fairly clean argument to be made that this little know-nothing company that at the time was, from a market cap perspective, was inconsequential. It meant absolutely nothing. They literally caused the collapse of the NASDAQ, and it was simply a psychology shift. It always is. There wasn't anything special about MicroStrategy that made. I mean, it wasn't like that was Cisco, for example, which of course at the time was one of the high flyers. No, this was this little nothing company that announced that they were doing some kind of M&A transaction. Then a couple of weeks later, they come back and say, "Oh, by the way, we have an accounting problem." And next thing you know, everybody wakes up in the middle of the night and says, "Oh, well, gee, how much risk am I carrying on my book here?" and by the way, how many more of these companies are frauds? And the answer is too many. And then, of course, the selling starts. So I don't know what will set this off, but I think one of the bigger risk factors in the crypto world right now is a piece of news that came out a couple of weeks ago, but it's been totally ignored. And that is that the CoinDesk, which of course is one of the largest exchanges, has issued essentially 0 1099s to any of the people who have been trading through in the United States. And eventually Dr. Sugar is going to figure out that there's an awful lot of money there that people owe in taxes that has not been paid. And I suspect is, that could get kind of interesting, because, you look at the Winklevoss twins that are now being touted as of last night as the first Bitcoin billionaires. Well, did they fork up their 39.6 on, that from 10 million to, I think it was 10 million they put in or something like that to $1 billion. That's a lot of money. And my guess is that the IRS would like their 39.6 on that. And if they didn't get it, well, there could be a problem.
Okay. So the fear of IRS audits, et cetera, people coming in thinking it was the misperception that they had anonymity.
Well, I think it's more than just the risk of audits. I think there's a possibility that you could have exchanges that fail to comply with the legal requirements to do business in the United States when it comes to tax reporting. I think it's a fairly clean argument the CoinDesk gets shut down.
The contract at the CME, people are going to get their 1099s. So.
Oh, absolutely, sure. At the CME, there's no question. I mean, they're not going to play that game. But,
right.
But what do you do with all the cash exchanges that are out there? And, and then there's always the possibility that you have something, you have a Mt. Gox writ large. People seem to forget that it isn't like this hasn't happened before, right? Where an exchange has just kind of disappeared along with all the money that was on deposit in it.
I see. Okay. Yeah, because they're not regulated. They're not clearing members of any exchange. They could just go away.
Yeah, well, what do you do with the the audit trails and things like this that are supposed to be there? I mean, I trade futures on occasion, and while the futures market is not perfect, at least one thing I'm reasonably sure of is that the money that's in my account at the end of the day is actually there.
Yes.
So,
and you're guaranteed by the exchange.
Well, at least in theory.
Even if the broker fails, if you're with a clearing member firm, you're guaranteed by the exchange.
In theory, we could talk about some of the things like Madoff and things like that where maybe that wasn't true, but at least in theory, yes, I am guaranteed by the exchange.
Yeah, I've never heard of a clearing member firm that customers were not made whole, and there were plenty of them. Stotler, RP&H. Refco.
Yeah, during the crash, after 2000, I had a trading account that got shuffled 3 or 4 different times from one place to another as people went under, and I never lost a penny.
Yeah.
So.
Okay, so why don't we shift gears to what's really on people's minds here after, and I read your piece here, so you're definitely, I would say, non-political, except that you think they're both, have a lot of shortcomings on both sides of the fence. So how do you think this is going to play out? We did get a pretty good market sell-off after the Flynn pleading guilty on Friday, but the market came right back after this, I guess you could call it tax reformation, tax package. Have you looked down the line, and do you have any kind of idea or opinion, I know that's all it could be from you, as to how this plays out as we go forward? Is there?
Yeah, I think we should take two. I think we should take two things and look at them as somewhat disjoint. Okay, and the first is this tax package, because that is legislation that is almost. I give that an 80% probability of being reconciled between the in conference between the House and Senate, and something getting passed. There are a lot of problems with that package. The most serious from an American public perspective is that, contrary to all the assertions from the political people that are in support of it, it's not going to do anything whatsoever for the common American in terms of improving their purchasing power. In fact, it's going to do substantial harm to it by putting another $1 trillion and change on the deficit. And by the way, the CBO is always off on the low side. So if they're saying that it's going to add $1 trillion to the deficit over 10 years, it's going to be 2. And that's not because they're corrupt. It's because they don't get to choose how they analyze things. They have rules that they have to use in their analysis. And those rules are set by Congress, and those rules are designed to intentionally understate deficit impacts. That has always been true, and they have never missed on the high side, never once. So anytime that you get a number from the CBO that says that it will hurt the deficit by blah, double it and you're close. And so the impact there is going to be awful. The corporate impact, on the other hand, is a different situation entirely, because what you will get is substantially more fuel for buybacks and maybe some dividend activity. My guess is you're also going to get a fair amount of fuel for M&A activity, which is not positive for the consumer because it tends to enhance monopoly power. But it's certainly positive if you happen to be holding one of the companies that has that, that gets taken out at a 50% premium. So if you're the stockholder in a company that gets snatched.
So it's fuel for the stock market, but not for the economy.
Yeah, well, it is in the short term. Yes, I think the reaction that we've seen over the last, since Trump was elected, I think most of it has been on the back of the belief that this kind of a package would get passed. And so I think to a very large degree, this is priced in. Now, how much more mania you get with this, I don't know. But in terms of the actual impact on profits and on corporate activity, I think most of it is priced in, if not maybe overpriced at this point in time, simply because I don't think the package ends up being all that big. The large multinational corporation doesn't typically pay 20% now. Getting rid of some of the loopholes means that it's going to have very little impact on their balance sheets and their operating efficiencies. Where it will show up is in some of the smaller and mid-sized firms. So I like I said, I think it's oversold, okay, in terms of what people think they're going to get down the road. So that's the first aspect of this. The political aspect of it is, from my perspective, much more interesting and more dangerous, in that you've got a situation now where clearly there's been the let's use the long arm of the government to harass and damage the opposition, which is not a new tactic. Okay, it goes back a very long time. In fact, it's kind of been a feature of American politics since America existed. But it's sort of reached a pinnacle, if you will, with what's going on now and what was going on in the last few years of Obama's administration. It's just shifted focus from one side of the aisle to the other. But that doesn't change the fact that if you lie to the FBI, you're in a lot of trouble. And if you lie to the FBI and and then you compound that by doing things that can be construed as obstruction of justice, you can have really, really serious problems, including if you're the president of the United States. Now, contrary to many people's assertions, the FBI cannot indict a sitting president. Okay, so people need to sit down about that. What they can do, however, is issue a referral back to the House of Representatives, and that's essentially was the process that was going on when Nixon finally threw in the towel and said, I'm done. That can happen, and of course, if Trump was to be impeached and removed, then they could indict him after he leaves office, which I have to assume wouldn't happen because Pence would pardon him.
Right.
So, but the problem with all of this is that what do presidents tend to do when these kinds of problems show up? Well, we can look at Bill Clinton. What Clinton did was start lobbing cruise missiles around.
I was afraid you were going to go there.
Yeah, well, unfortunately, history says that's where we go.
A president in wartime. Is that where you're going?
Well, I think there's given the provocations that exist now with North Korea, which are extremely serious. Anyone that does not take that threat seriously has rocks in their head, and we have a 30-plus year history of dealing very poorly with it. Okay, we have essentially got this idea in our head that we have the right to arbitrate as the United States, and maybe Russia as well, and a few other countries, who has the right to have nuclear weapons. Okay, well, this is a binary decision that we either have the ability to arbitrate this or we don't. And if we do, then we'd better do something about it, because these folks now have not only weapons, they also have missiles that can deliver them. Whether they can make the two of them work together is not proved, but I can't prove it is a terrible thing to rely on when being wrong means that you have a city that gets vaporized. And if we don't have the right to make that decision, then I hope you're ready for Iran and Venezuela as just a couple of examples of countries that I'm quite sure we wouldn't like if they had them. to show up with these things in the very near future. So I am not at all comfortable with any of this. I just saw a report over the weekend that now you've got people in the military complex that are saying we got to get the dependents out of South Korea, and frankly, I think that should have been done a year ago.
You broke up a little bit. Who do they want to evacuate? The troops?
No, they want the dependents. They want all the families out.
Okay.
So basically, you know, I mean, right now, if you're in the military and you get posted over there, your family goes with you.
I see.
They want that to become an unaccompanied tour location, which is true for some of the other third world hellholes that we have troops in. But I think that's a decision that should have been made a couple of years ago, because this certainly is not something that just popped up out of the middle of nowhere. The North Koreans have been working on this technology for quite a long time. But I'm very concerned about the possibility that we either have to act on this or we have to just admit that we're not going to do it, either with them or, for that matter, with anybody else. And my guess is that when under pressure, the option's going to be taken to blast this guy.
Okay, and you think the pressure could be the threat of losing power?
I think there's a legitimate reason to make the decision, and I think there's also the compounding pressure that is not quite so legitimate. The old wag the dog thing.
Okay, because a lot of our wars recently were about hegemony, right? Would you agree with me that any country, oil producer that wanted to get paid in anything else but U.S. dollars, coincidentally, there was a war there?
I think there's a pretty clean argument for it, but you also have to look at the other side of this too, which is we have in the past told people to give up their weapons of mass destruction. Gaddafi,
right,
of course, being the most recent, right?
Yeah.
And you saw what happened to him,
right?
After he said yes. That didn't work out so good. So
he's
for us,
not giving them up.
Yeah. So I mean, for Kim Jong-un, nut job though he quite clearly is, in my opinion, I'm sure he saw that and doesn't want to be the next guy up.
Can you put a percentage on it? How worried are you? You put a percentage on the tax bill, where would you put this? 50?
I think, well, first off, I think if there's a higher percentage that we end up shooting back and forth by accident than by deliberate act.
I mean, like with the exercises that are going on there today?
Yeah, and someone over there gets trigger happy and blasts one of our planes, and then things get really bad. I think there's a 50-50 chance within the next year or two that we have some sort of armed conflict. And the problem with us trying to take him out and essentially end this problem is that we have, and it's not an indictment of the United States, because these operations have a very high failure rate. I would be willing to bet that there's at least a 50% chance that if we do it, we miss. And then if you're in South Korea, you're going to have a really bad day. How far that goes and whether or not he's crazy enough to use what he's got, I don't know. But the damage to the South Korean economy, remember that a huge percentage of all electronics manufacturing at some phase goes through South Korea. So if Seoul gets attacked, whether they get nuked or whether it's just conventional, there's thousands of artillery pieces that are on essentially what amount to railroad tracks dug into the mountains just north of the DMZ. We cannot get them before they rain tens of thousands of shells down upon South Korea. That's just fact. The damage to the global economy, especially in the high-tech area, that would come from such an event would be, I can't even put a number on it. But it's going to be everywhere. It's not just the United States. It's going to be worldwide.
Right. Okay, so they'll probably shut the markets down for a week, something like that.
Well, I don't know if they'd shut the market down, but I'm quite sure that you're not going to like the direction of the arrow.
Okay. Anything you want to wrap it with today, Carl?
No, I don't think so. The only thing I would add is that if you really want to look at where the problems are within the U.S. economy and what's driving the issue, it's the scam in healthcare. if we do not solve that as a nation within the next several years, and I am, a few years ago I said end of Trump's first term. I'm still pretty much on that timeline. We could be off a couple of years one way or another, but I first put this timeline out back in the 1990s. So if you're off by 2 or 3 years over 30, you're not doing so bad, right?
So you mean if we don't solve it, that there's a price to pay?
The economy will fold back and collapse, and so will the markets. Okay.
So you think that could be the trigger, since what is it 1/3 of our economy, healthcare?
It's approximately 20% of GDP.
Oh, 20%
today,
okay.
And it needs to be 4.
Okay.
So yeah, that's a huge problem. The problem is that if you actually fix it, you get a recession unlike anything we've had since the 1930s.
And how do you fix it? Quickly.
You start locking people up for violating 100-plus-year-old law that does apply to them. It's 15 United States Code Chapter 1. So Sherman, Clayton, and Robinson-Patman Acts. The health industry twice has tried to go to the Supreme Court to get declared that they're immune from this. They lost both cases. That was in the late 1970s and 1980s. There has not been one attorney general that has brought a case related to this since, and that's insane. Okay,
is that a monopoly law?
Yeah, that's Sherman, Clayton, and Robinson-Patman are antitrust laws. Yeah.
Okay, so, and what happened over the weekend with, who was it? HealthNet?
And CVS.
Yeah.
That's you're just adding to, you're just adding to it. You're adding to the problem. So.
Yeah. All right. Well, I tell you what, I really appreciate meeting you and getting your view, and it was a very interesting explanation about some of the pitfalls in crypto. And just like you, I pray that peace reigns. And thank you for making our community aware of some things on a macro level that affect our lives more than being in a good trade and making 50 pips in the euro currency. And I do have one point. I'm going to mentor you. You call yourself irredeemable, Carl?
Yes.
I believe anything that you call yourself or say about yourself, you become. And I disagree, because I don't think anyone's irredeemable. And after talking to you for half an hour, either are you, buddy.
Well, I took that off the deplorable and irredeemable thing from the campaign. That's where that came from. So
yeah, you've been redeemed, and it's very, it was real nice meeting you, Carl. And Carl's a great follow. You could follow him at Ticker Guy, and I follow you even though you don't follow me. And people could go to your website here. Any other place they could see your writings or your views? This is the main.
Yeah, market-ticker.org that's pretty much where I write. So you'll find my stuff.
Okay. All right. Well, Merry Christmas, buddy, and Happy New Year.
Thank you very much. Thank you for having me on.
You're very welcome, Carl. Okay, Face, that's it for today. See everyone tomorrow for Turnaround Tuesday. Glad you enjoyed it, Tom. Kevin, glad you liked it. And we'll be seeing you tomorrow morning. Maybe there'll be some nice reversal trades to take tomorrow. And most of all, guys, don't just count your pips, count your blessings. See you tomorrow, guys and gals. Thank you, Carl.
Thank you.